In this video, I will talk about Nick Shawn, or more specific about Nick Shawn's trading concept. He's a trader who talks on YouTube about a grid trading approach, or what he says is dollar cost average, which is pretty much the same term. He also uses some kind of martingale mechanisms, but I will not cover this in this tutorial or in this video. In this video, instead, I want to test his idea in general. Can it work? How risky is it really? And what are my thoughts? So what I did here, and what is also running in the background already, is a program that can trade multiple currencies and uses a dollar cost average approach. So how does this work? So this program tests if a market or a symbol was going up and down, or up or down, more than X% in the last 30 days. In this specific example, I'm using 3% as a trigger. So if a market moved more than 3% in the last 30 days, which happens quite often, we want to enter a position. If this position then goes into profit for more than 10 euro, it will be closed. And the position will be closed with a minimum lot size. If the position does not go into profit, we will just add up more and more trades. So you can see this here, for example. This is a very good example. We add more and more trades. The signals are checked once at the beginning of once a day at 10 a.m. So at 10 a.m. every single day, every single symbol here is checked, and we check if we have a first signal or if we need to increase the position with another additional signal because the market was not going into our direction. If we have more positions, like here for example, we have a total of 6 positions, then our target for this would not be 10 euro, but instead it would be 60 euro because we want to make 10 for every 0.01 lot that we trade here. So this is the strategy. I mean, it might not be exactly what Nick Shawn says, but it is good, I think, to say how, or to show how this strategy can work out if you trade it for a long time. And the idea of this strategy is very simple. Like we can see it here very nicely. Even though a strategy is not going into your favor immediately, if the price comes back at some point, you should be able to close all of the positions in profit. And theoretically, price does not go into one direction only, especially for currency pairs. So here we can see a bunch of buy positions open in Euro US dollar. But if the market goes up quite a bit, and since we have this dollar cost average effect, we are moving the break-even price further and further down. So if the price comes back up to somewhere of the level of the beginning order, or not even that far, we should be able to close all of the positions in profit. So we have temporary drawdowns, which can be bigger. And this is the risk, of course, of the strategy. But yeah, as you can see here, at some point, the strategy should be able to close the positions in profit. Also, we do this in all of the symbols that I use here. Currently, I'm running this test with all of the minor currency pairs. So you can see it should look somehow like this. So even if you have temporary drawdowns, you will, or you should eventually hit the profit target and then make a profit. But of course, this can also go wrong. Like if a market does not come back at all and it is just going into one direction, you might pay a lot of swap costs, or you might also just blow your account if you do not have enough money for more positions, or you get a margin call, then the broker will start to close your positions. So let me end this test and let me now show you what we can also do. Instead of trading only the major pairs, we can also trade all of the minor pairs. And this is something that Nick Shawn also talks about in his videos. He says that you can trade this with any symbol pretty much. So you can see here, these are pretty much all the minor and major pairs that I can trade with IC markets, and I enable all of them now. So if I do the same test now and I don't change anything else and click on start, we can see that instead of just trading these 5 or 6, I don't know, major pairs, we now load also all of the minor pairs. So really, we do have a lot of charts open here, and we do see a lot of trades. So you can see as I load the test here, more and more of these minor pairs are also coming in because we see the first trades. And here in the toolbox, we can see we now also trade USD Swiss franc, for example, USD CAD, Australian dollar against the Japanese yen. So you can see I'm really loading all of them, and I will quickly show you how this looks once everything's loaded. And then I will do a non-visualized backtest over a long period of time from 2015 on, so for the last 8 or almost 9 years, and we will see how stable this would have been if I traded this exactly like this. Of course, there can be modifications done to the strategy. As I said before, Shawn also talks about Martingale sometimes, which means that you also increase the lot size, which will, of course, also increase the risk, but also increase the chance that you go in profit quicker. So there are different modifications that you could do. This is more of a basic approach. And by the way, just before I did this video, I recorded 2 programming tutorials already, so you will know exactly how to create this actual strategy. So if you are interested, you should definitely also watch these videos. So here you can see I now trade all of these different currency pairs here. So also all of the minor pairs. So if I go through all of them here, you can see as soon as there is a signal, position will be open, and we use the same grid trading or dollar cost average trading approach. So the graph will look different, of course, now because we trade more symbols, but in general, we always see the blue line, which is the balance line, which is most of the time above the equity line, which is the green line. So let me now also stop this test and minimize the visual mode or deactivate it. So here you can see the settings again. I'm trading 0.01 lots. This is the trigger, and every 0.5% in this symbol, we then add up positions, and the TP is 10 euro or US dollar, whatever this currency is, per 0.01. So if I now go ahead and deactivate the visual mode and still test the same period, we can see the test a lot quicker, and we can only see how the balance and equity curve develops. And this is enough, I think, because there's not really a benefit of watching the charts because the strategy is easily explained, and it's also not really about like specific chart formations or indicators. It's really, really simple, and this is honestly something that I like. So I'm not, even though I think this is not a super safe or risk-free approach, I think this is actually an idea that could be used. You just have to be aware that there is always the chance that you blow your account. And it is really important to figure out if you are able to win or to double your account more often than you blow it. Because if you double your account, you can theoretically make a payout of your initial deposit and then trade on with the rest of the money. So this is really like the idea. You should double your account more often than you blow it. Or if you break it down, you should make more profits than losses. This is in the end what it comes down to for every trading strategy. And there's no difference with this specific approach. So you can see now we can load the test a lot quicker. And I will just let this test run through, and then we will talk again at the end, I would say. Okay, so here we can see the test is over, and we made 50,000 euro, which is 50% on the 100K that I use as a starting balance for this test. But the problem is the equity is way below the balance. So the equity ends somewhere at 50,000. And in the end, at the end of the test, all of my open positions were closed. And this leads to a drawdown of 50K. So we did not really make 50%, but we lost 50%. And this is, this is just the risk that you take if you trade strategies like this. You can change the outcome of this program by just changing, for example, the input parameters. You could also change this definitely by adding something to the code that that will just make the program open bigger positions if there are already positions open. Like for example, maybe we can do this together. Like this is the code. If you watch the previous videos, you have the code already. So what we can do is we can say input int increase after X. So for example, after 5 trades, we increase the lot size. So let's say we don't trade 0.01 lots then, but instead we trade 0.02 for the next trade. So what we can do is when we open here the step positions, instead of using a lot size from the inputs, we just calculate it. So we say double lots is equal to lots first of all, but if, or we can say if symbol tickets total is greater than, wait, what was it? Increase after X, or is equals, greater equal increase after X, then we can say lots plus lots multiplied with symbol tickets total minus increase after X. So let me check if this is correct. So let's assume we have 5 open positions. 5 minus 5 is 0. So yeah, it has to be greater then. Otherwise, it does not really make sense. But yeah, if we add this and then use the now calculated lot size here instead of the previous one, yeah, we can just do it like this. And then also, so that the trades are actually closed quicker, we should not use the mechanism that we used before, which is here profit lot step multiplied with lots divided by lot step, because in this case it would not really make a huge difference, I think, because I mean we increase the lot size by more, but we also want to make more profit. What we could do is, for example, I mean you can also test this, but what I want to do now is instead of doing like this, I want to say profit lots multiplied with symbol tickets total. Just with, like for every single trade, we want to make 10 euro. And this makes sense, I think. So if I show you the same test now again, yeah, maybe let me show you this just for the minor pairs. The major pairs in the visual mode, so you can see how this now turns out, because the outcome will be different, of course, now. Because now we have this Martingale component also that I think Shawn also promotes or suggests in his videos. And I want to show you how this turns out in the visual mode first. And then I want to do another long-term backtest with the same settings pretty much, but with this new expert advisor using Martingale. So you will learn how what the difference is. And yeah, so you can see we have 1, 2, 3, 4, 5 open positions. Then the sixth open position is also with the same lot size. So yeah, my calculation is not 100% correct, I think. But from then on, we always increase the lot size by 0.01. So yeah, this will of course make sure that if we go back just a little bit, we can already close here. And we still should make a profit. Wait, we don't make a profit? Okay, so I really have to work on this some more. Yeah, let me check the code. Wait, we made a profit. I don't know why it says that we did not make a profit. Minus 300 is not really correct. Oh, it's the open profit. Sorry, I was checking the open profit, not the history. Okay, so you can see the logic is working. The only problem is that I have to fix my calculation here. So if we are above increase after X, lots plus equals lots multiplied with symbol ticket total minus increase after X. So if we have 6 tickets in total, we should increase the lot size already, I think. I don't know why it is not working like this. Let's do the calculation. Like, here we had 1, 2, 3, 4. 1, 2, 3, 4, 5. And then this should already be with the initial increased lot size. No, okay, it's not. Because we have 5 positions. 5 minus 5 is this. So we have to do it like this. Greater equals minus blah, 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 plus 1. Like this, it will work now. Okay, so yeah, now it should work and we should increase after, let's say, 5 positions. I will do one last test just to make sure that everything's working now before I do the long-term non-visualized test. So we can really spot the difference because the previous test was not really good, I would say, because we just made like 50% on the account and in the end lost 50%, which is not enough in so many years. So here we will make sure that we just increase the lot size quickly after we open 5 positions. And here you can see, yeah, then we close the positions and we make a profit. And you can see this will, of course, lead to quicker drawdowns because we dramatically increase the risk, but it also helps us to recover a lot quicker. And yeah, I just realized that the visualized backtest is also super fast. So I don't really have to do the non-visualized. But maybe it's just this fast because I only use the major pairs. But yeah, I think you get the idea. Like this is how it works with the Martingale. So yeah, now we also get in a drawdown. So you see this is not the solution to all of your problems pretty much. You still enter these very big drawdowns. And I think like one of the charts here is in a very big drawdown right now. Because... Wait, or was it closed already? Yeah, okay, it's not in a super huge drawdown, but this is some kind of drawdown. But yeah, I think you get the idea. So what happens if I now enable all of my minor pairs also? So let me just add the minor pairs here. So now we trade the whole bunch of trades here, symbols here. And then I will use the now adjusted Martingale program in the non-visualized mode from 2015 on up to the current point in time, which is, or the end of October 2024. So this is a long period of time. So we will just check if with these settings, we would actually make more profits or we would make more profit than losses. And let me just wait until this test is finished and then I will share some thoughts on the strategy one more time. Okay, so this test is now also about to end, and you can see, actually this did not increase the performance a lot, I would say, and we are also in a very huge drawdown. So adding these Martingale functionalities, it is not the solution to everything. It's not the holy grail by any means. And I mean, this could have been a lot better if we were just a bit more lucky, I would say. So if this bad series of trades that we currently have, obviously because we are in a huge drawdown, if this would have been closed at some point, then the performance would look a lot better. But trading is not about what if and if this would have happened, I would have made money. Trading is about you only get what you trade. So if something does not happen, it does not happen. So there's no need to hope for anything or say if this, then that. You can only take what you get. So with these strategies, I mean, if I would play around with this and if I would change the settings a bit, I'm pretty sure I could create a bunch of good testing results. Because as I said before, the strategy, I don't think it's like BS or something. You can definitely make money with this. If you're lucky, you can also make a lot of money. But if you're unlucky, you can lose everything. And the problem is that if you are in a situation where you are about to lose everything, this is when it will really put a lot of mental stress on you. And this is something that is not to be underestimated. Because this stress might really, like if you trade real money and a lot of real money, like if you over leverage your personal finances, this is something that can really ruin your whole life, can make you super unhappy. can set you back to zero essentially. So with strategies like this, everyone is free to use them. I am not the one telling you this is good or bad. It can definitely make money. It can definitely blow accounts. So you have to decide whether you want to use it or not. From my experience, I also had a Martingale and Grid account running for multiple years. I stopped this project eventually because it was just a demo project, but I made like 150 or 200%. Actually, I'm not even sure how much money I made. So you can definitely double your accounts if everything goes good. And there would be multiple ways to make this program maybe even a little bit smoother, better, more advanced. And you can do so because you have the code. But please just promise me one thing, that you're always careful when you use strategies like this and you never use money that you cannot afford to lose. So that's the most important message that I want to give you if you really want to use high-risk trading strategies. So yeah, I hope you like this little series, and that's it pretty much. Have fun playing around with this concept, with this expert advisor, and I will see you in the next video. Have a great time and good trades. Bye-bye.